Continuing Managerial Accounting Example 3B. Requirement 5. We're told that the company used $865,000 of direct material, $1,850,000 of direct labor. We're told beginning and ending work in process, and we're asked for a determination of the cost of goods manufactured for the year. So we're going to start with beginning work in process with our given balance of $85,000. We're going to add to that direct material used during the year, and we're told that that's $865,000. We're also going to add direct labor during the year of $1,850,000. And then we have to add our manufacturing overhead applied. Now remember that the amount that goes into work in process is the manufacturing overhead that's applied. It's not the actual. During the year, we don't know what the actual total is going to be. What we know during the year is our original estimate of $20 per machine hour, and we know how many machine hours are actually being used during the year. So during the year, we use this approach of taking the number of machine hours, multiplying it by $20, and by the end of the year, what's happened is we've worked 76,500 machine hours, multiplied each one of those by $20, and so the total overhead applied is going to be $1,530,000. We don't know the $1,582,000 until after the year's already over, and when the year's already over, the overhead that's been applied is the $1,530,000. So I'll move this over here to make the subtotals a little bit better. So we start with $85,000 of work in process. The work we do during the year, the total manufacturing costs, is the sum of direct material, direct labor, and manufacturing overhead applied. So that's $4,245,000. So that gives us our total WIP, the $85,000 we start with, plus the $4,245,000. We can subtract from that our ending work in process and determine how much our cost of goods manufactured is. Our ending work in process is $92,000. And so our cost of goods manufactured is our total WIP minus our ending WIP, then $4,238,000. From there, we can move on to requirement 6, and we can figure out our unadjusted cost of goods sold, and then requirement 7 will add the adjustment for cost of goods, or for underapplied overhead. So requirement 6, our unadjusted cost of goods sold, we simply take our beginning finished goods inventory, and that's given at $105,000. We're going to add to that our cost of goods manufactured, $4,238,000, and so our cost of goods available for sale is $105,000 plus the $4,238,000, or $4,343,000. Subtract from that our ending finished goods inventory, which is given at $127,000. And that gives us our unadjusted cost of goods sold of $4,216,000. Now, why are we calling this unadjusted? It's unadjusted because we haven't yet done anything about our $52,000 of underapplied overhead. Remember that we haven't put enough overhead cost into our production. Our work in process has included only $1,530,000 of overhead costs, but we actually spent $1,582,000. So this additional $52,000 of overhead costs that we've spent has not yet been included in work in process, so it's not in our cost of goods manufactured, it's not in our cost of goods sold. So what we need to do then is adjust our cost of goods sold to put this $52,000 of cost that hasn't been accounted for anywhere. We're going to account for it somewhere. We're going to put it into cost of goods sold. Now this is a simplification. It is the case that our ending WIP is probably understated because we haven't put enough cost into ending WIP. Our ending finished goods is understated because we haven't put enough cost there. And our unadjusted cost of goods sold is understated. All three of those accounts are going to be understated because there's not enough cost of goods sold in any of those, or so there's not enough cost in any of those accounts. But for simplicity, what a lot of organizations do is simply drop it into cost of goods sold. And that's the approach we're going to take here. So we're going to take our unadjusted cost of goods sold of $4,216,000. Since we have too little cost, we've underapplied our overhead. We have to add cost back in. We're going to correct the error that we made of $52,000. And so our adjusted cost of goods sold is going to include more cost. It's going to be the sum of our unadjusted plus our underapplied. And our adjusted cost of goods sold is $4,268,000. So the $52,000 of cost that never made it into WIP and therefore didn't make it into cost of goods sold has now been put into cost of goods sold. Now let's take a look at an overapplied overhead example. So we're going to assume, instead of what we had in requirement 4, instead of assuming that we spent $1,582,000, instead we're going to assume that we only spent $1,507,000. That's what we're going to do here. So we have to recalculate our amount for requirement 4, and we're going to redo our adjustment from requirement 7. Our applied overhead is still going to be the same, so we'll go ahead and keep that number from before. Our applied overhead to all production is going to be $1,530,000. But in this example, our actual overhead spent is $1,507,000. And so in this case, we've applied too much. Our overhead applied is too high. So we have over-applied overhead in this example of $23,000. So what we're going to do there to adjust cost of goods sold is to take our unadjusted cost of goods sold of $4,216,000. We're going to subtract out our over-applied overhead, because in this example, if we'd spent $1,507,000 but put $1,530,000 into overhead, we've put more cost into our inventory accounts than we've actually spent. So we need to correct that error by taking it back out. And so our adjusted cost of goods sold is going to be $4,193,000. In either case, whether we've had to adjust for underapplied or overapplied, the adjusted cost of goods sold is a number that will show up on the company's income statement.